Welcome to This Week in Money. I'm Jim Goddard. Today, Doug Casey of Casey Research tells us lack of confidence in the U.S. government sees international trade switching away from American dollars. Investment planner Danielle Park believes cheap credit has encouraged bad financial behavior for consumers and governments. We'll talk to Doug Casey right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on The Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
My guest is Doug Casey of Casey Research, one of the most respected newsletters in the world when it comes to finances and what's happening with your money. Doug, you just come back from your own summit, the Casey Summit, where people discuss their economic plans, what's on the books for the future. What was the finding of your summit? What were your guest speakers telling people?
On the whole, that there really is no way out. I think we've passed the point of no return. That's pretty much the story. We had Ron Paul and Lacey Hunt and Jim Rickards and Don Cox, a whole bunch of people. And that's the bottom line. It's that the U.S. government really has gone beyond the point of no return at this point. So, rigged for stormy weather as we go back into the hurricane, into the trailing edge of the hurricane that we entered in 2007 and have been in the eye of the storm for the last couple of years.
Certainly hasn't helped that the U.S. government hasn't had a proper budget for 5 years. I mean, what kind of message are they sending everybody else?
Well, the U.S. government hasn't had a proper budget for many decades. That's how they've run up $17 trillion of disclosed debt and another 60 to 200 billion of contingent debt and off-the-books debt and so forth. So, it's simply a matter of the inevitable becoming imminent at this point.
I saw a Republican congressman say, well, there's so much of an impasse here in D.C. that we're praying for a solution.
Well, the Republicans are the stupid party and the Democrats are the evil party. And you'd expect the Republicans to pray because that's... I mean, they're mostly the thump the Bible types, but none of these people have any solution except for raising the debt limit, which means raising the amount that future generations are going to have to pay with taxes. I think it's going to be inflated out of existence, frankly, over the next couple of decades. The U.S. dollars are going to lose value radically, and that's how it'll be defaulted on, as opposed to in an honest way where they say that they can't pay it and don't pay it.
Many people have said if the U.S. government doesn't pay some of the bills that are due on the 17th, that the American dollar may no longer be the world's trade currency. But is that realistic?
Not at the moment, and the reason for that is that there are, nobody knows for sure, but there's something like 6 or 7 or 8 trillion U.S. dollars that are outside the U.S. I mean, it's long been said that there are more $100 bills circulating in Moscow than there are in all of the United States. So I think what's going to happen, however, is that confidence is going to be lost more and more quickly. And non-Americans who don't have to hold dollars, Americans are forced to hold dollars. It's the legal tender in the U.S. But foreigners are going to be looking towards the exits and getting rid of these things. And ultimately, all those hot potatoes are going to have to come back to the U.S. And when they come back to the U.S., it's going to be in exchange for something. Title to land, title to share certificates, real goods. So it is actually very serious that if the world loses confidence in the U.S. dollar, because I'm afraid the U.S. dollar doesn't rest on anything more stable than the confidence of strangers at this point.
And have we been overly optimistic strangers?
Oh, completely. If I had a significant amount of U.S. dollars and I was a foreigner, I would look to trade those dollars for something of real value as soon as possible. Now, none of the markets in the world are cheap today because that's exactly what people have been doing. You create trillions of currency units. Many of them are going to bid for real assets. But still, you've got to get rid of those dollars for something of value. And I'm very partial to the precious metals.
Some people have said there's overconfidence in gold and silver as well, but does 5,000 years of history kind of give you the proper perspective on it?
Yeah, I mean, gold is not like a giveaway bargain anymore. The last time that was true was back in, 2001, when it was trading at $255 an ounce or something like that. And in real terms, in 2001, when it was $255, it was cheaper than it was back in 1971 at $35 an ounce when they devalued the dollar. No, it's not at giveaway levels anymore, but it's a very, very reasonably priced acquisition at $1,300 an ounce. And I suggest that people take those dollars out from under their mattresses and trade them for gold coins.
Is this why China has been doing its very best to snap up every piece of gold it can lay its hands on?
Well, the Chinese are actually very smart. And China's the largest producer of gold in the world, to the best of our knowledge. And there's no gold exported from China, but a lot of gold imported to China. And the Chinese government encourages the Chinese people to buy gold. So the Chinese are going to work out better than most from the Greater Depression, which has started, I think.
Yeah, it's interesting that the Chinese government told their people to buy as much gold as they can, just like the government is. But take a look at India, where they've put a restriction on owning gold.
Well, I know. India is a dog's breakfast. It made some steps forward in the last decade, reducing a few taxes, reducing a few regulations, but it's still mired in all kinds of ridiculous socialist ideas. So it'll continue to exist as it has for thousands of years, but I don't see any real opportunity there until they change things. So it's very problematical.
Well, they invented the term red tape.
Yeah, that's true. It's the most bureaucratic major country in the world at this point, which isn't to say that the U.S. isn't becoming much more bureaucratic, but nothing can compare with India when it comes to Kafkaesque regulations and taxes. Yeah,
please don't buy any gold, and by the way, here's where you can buy some.
Yes, I know, it's ridiculous.
I hear that kind of stuff all the time. Well, I would also like an opinion on Janet Yellen, who's now the penciled-in chair of the Fed after Ben Bernanke walks away into the sunset. Will Janet make any difference?
Well, I don't know the woman personally, so all I know is what anybody else knows, which is to say what she said in public forums over the years. She impresses me as having a high IQ, but actually knowing very little about economics and being very unsound. So, to all appearances, she'll continue printing up as many U.S. dollars as necessary to maintain the creaky financial superstructure that we have that's really on the ragged edge of collapse. So I'd say nothing new there, just another inside the Beltway bureaucrat, and she'll continue doing what Bernanke did and Greenspan before him.
Would some people in the market say we like having stability, so if she's just like the person she's replacing, at least we know what they're going to do?
Well, look, this whole rotten structure, and it is a rotten structure at this point, totally corrupt, built on a central bank that prints up money for political reasons, going to a commercial banking system with 10% reserves, fractional reserves. A sound banking system would have 100% reserves and strictly separate demand deposits from time deposits. Now the whole system is going to come down, and Janet Yellen or anybody else can't do anything about it. I just pity the poor fool for being in office when it's likely to happen.
Mark, a historian told me in situations like that, the more the government tries to intervene, the more they're actually going against what should be the natural forces that govern the markets.
Yeah, actually, the government should have, and I don't know, this may actually shock a few of your listeners, but the government should have zero force and effect in the economy. From my point of view, if you're going to have a government, it should, since it's pure force, government comes out of the barrel of a gun, it should do nothing but protect you from force, and that implies police within the bailiwick of a country, an army for outside the borders, and a court system so you can adjudicate disputes without resorting to force. There should be absolutely no economic intervention whatsoever. But at this point, people think the government's a cornucopia. People look to the government to actually control the economy. So they're going to get what they deserve, good and hard.
Well, the communists tried to control their economies, and look what happened to them.
Yeah, I'm afraid the same thing is going to happen to the U.S. I just hope that the U.S., and I don't call it America anymore, because America was a wonderful idea, a unique idea, but that's disappeared over the last couple of generations, and it's just the United States, just another nation state. I hope that when it collapses, it's quiet and relatively peaceable, like the Soviet Union when it collapsed, as opposed to violent and unpleasant.
Like Libya.
Well, anything can happen. Anything can happen. And people are thinking politically these days, which would imply that they want a leader. So I guess they're going to get one. My guess is that in the next elections in the U.S., and this is conjecture, who can know what's going to happen? Anything could happen. But I suspect the Democrats will run somebody perfectly horrible like Hillary Clinton, and the Republicans will run some right-wing general. And since the Americans really like and trust their military, which I don't understand, it impresses me as nothing but a heavily armed version of the post office, they'll get some right-wing general to tighten things up for them. And that's going to be very, very dangerous. It's not just the military-industrial complex. It's the military, bureaucratic, pharmaceutical. I mean, all of the major corporations in the U.S. Are able to hire the lawyers and the lobbyists to get laws passed to their advantage, which is to say, against the interests of the average guy. So the U.S. doesn't have a capitalist system. This is a misnomer. Technically speaking, it's a fascist system. A fascist system is one where private property is still privately owned, but the government makes rules and regulations, much the way the Germans and the Italians did in the 30s and 40s, for the benefit of these corporations and the bigwigs that run them.
And, I had a poli-sci professor tell me, too, that China is no longer communist. They're fascist. They don't care about the average person, if they ever did.
Well, that's right. It's very funny that they still have a communist party, but that's really just a scam for the people that are members of the Communist Party to to skim something off the top and retire as billionaires. No, it's not communist at all. It's not even socialist, because socialism is a system. Communism is a system where the state owns everything, right down to your toothbrush and your clothes. Socialism is a system where consumer goods like cars and houses are still privately owned, but all the means of production are owned by the state. And this is not very much true anymore in China. Almost everything's privately owned now. So yes, he's quite correct. It is a fascist system, just like the U.S.
What can the average person do? I know, Canadians and Americans, cousins, literally for me, so many relatives in the U.S., we're so frustrated with governments that don't seem to care about the people who elect them. Do they only think about the people at election time?
Well, of course. They're the people in the U.S. or the Canadian governments are an elite. They don't care what the little people do. They just want them to be stupid enough to vote for them. And there's no difference between the various political parties, liberals, conservatives, Democrats, Republicans, what have you. They're just two sides of the face, two faces of the same coin. So for years, I've urged people that are sincere and well-intentioned to stop voting, because when you vote for Tweedledee instead of Tweedledum, Tweedledee doesn't know that you're actually voting against Tweedledum. He thinks you're voting for him, and he thinks you're endorsing whatever idiotic programs he's got. So I think that we ought to retro-rock to the 1960s in some ways, where it was a catchphrase. Suppose they gave a war and nobody came. Well, let's take that to the next level. Suppose they gave a vote and nobody came, gave an election and nobody voted. Suppose they gave a tax and nobody paid. Frankly, the government, either in the U.S. or Canada, serves no useful purpose. It's just a gigantic swindle. Reducing your standard of living, taking half of what you earn in taxes, and keeping you on a leash like a dog.
I thought they were supposed to be of the people and for the people. They keep using that slogan all the time.
I know, that's ridiculous propaganda. It sounds good, and people repeat it, but it's completely untrue.
Is it really true that group of billionaires who gets together every 4 months to discuss world economics, are they the true leaders?
Well, I really don't know to what degree any one group of people. There are these conspiracy theories that are floated, the Bilderbergers, the Council on Foreign Relations, the Illuminati. Most of this stuff is made up by tinfoil hat wearers, I suspect. But you can rest assured that most of the people that are making billions of dollars today are doing so because they're standing close to the spigot of money that's flowing out of national capitals. That's how they're getting wealthy to a great degree. Now there are people that still get legitimately wealthy. People like Steve Jobs that actually create new products that everybody wants, and they're unjustly besmirched by.
Well, he got fired twice by his own board.
Well,
the guy who invents it, and now I hear same thing's happening at Microsoft. The committee that's going to appoint their next CEO doesn't want Bill Gates to be part of the process.
Yeah, I'm not really a fan of Bill Gates, but you're quite correct. That's what always happens, and managers who don't own any shares wind up taking over. So the system becomes more and more bureaucratized and more corrupt, and people rise in the corporate hierarchy not necessarily through competence and ability, but through political backslapping and backstabbing. That's just the way things go, I'm afraid.
Well, sure, you see it in the workplace. People wonder, why would the boss promote that person? All they did was suck up to the boss for the last 2 years. Can't he see the obvious? And apparently not.
No, that's right. And of course, that's That happens on steroids in places like Washington and Ottawa.
Where power is the drug, and the more power they get, the more they want.
Yeah, and the power naturally translates into big money for them, too. I mean, it was very funny when Bill Clinton was in office, and he was whining about not having enough money to pay his legal bills due to the ridiculous Monica thing. These stupid Republicans should have impeached him for something of substance instead of just having an affair with some intern. But anyway, Clinton was whining about not having any money, but now he's probably worth $100 million. He's gotten gigantic consulting fees and speaking fees and book contracts and corporate directorships and sweetheart deals. The way we do it in the U.S. and Canada is we don't slip people envelopes or suitcases of $100 bills the way they do in the third world in Latin America. We're still relatively high trust societies, so we wait until the politicians are out of office and then pay them off with those things later, and it's completely legal.
Yes, I've noticed that with former premiers here. Gordon Campbell was the most hated man in British Columbia, so the Canadian government appointed him Canadian High Commissioner to London.
Yeah, of course. The way to do this is not by passing yet more laws, which make things worse, about what they can do and can't do after they're out of office. The solution is to get rid of the laws that give them power over the economy while they're in office, so they're not in a position to dispense economic favors to people that will bribe them or pay them off later after they're out of office. That's the problem. It's that there are all these economic laws on the books. That's the real problem.
Doug, is there a website people can go to find out more about what you believe might happen or should happen?
Yeah, they can go to kcresearch.com, and they might also enjoy my last book, Totally Incorrect, which is available on Amazon and other booksellers.
Thank you very much.
Well, I appreciate it. Thanks, Jim.
After the break, Danielle Park on This Week in Money.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
My guest is Danielle Park, author of the bestseller Juggling Dynamite and president of Venable Park Investment Counsel Incorporated. Welcome to the show, Danielle.
Good afternoon, Jim.
Things we'd like to touch on today. Janet Yellen, the first woman who will be appointed the head of the U.S. Fed. And the people I've talked to so far like her. We'll find out what your opinion is. We'll take a look at the economic growth numbers. Can they be believed? Corporate earnings, are they good or bad right now? And have we been overly optimistic in our investments? Well, first of all, let's talk about the person who's about to take over from Ben Bernanke. What about Janet Yellen? What do we know about her, and what is she expected to do?
Well, I think she's a very well-known academic, and she has no doubt spent her life being very well-read and writing very prominent papers. She was a professor. She's had a very impressive academic career. And I'm all for, women breaking down barriers in terms of jobs that have not previously been offered to them. But having said all of that, I don't think it's going to make a whit of difference. I think that the reality is she has been a keen supporter of the QE programs to date, and of Ben Bernanke has opened the floodgates since 2009, and I don't think that's going to change anything. So if you talk to someone who says that they like the appointment of Janet Yellen, they're probably on the sell side in the investment business. They're probably very long stocks right now, and they're probably hoping that more QE, the continuation of the policies, is going to continue the support for asset values. So I would suggest that's the people that are pro this call. Others are sort of realists like myself saying, you know what, we've got a very significant slowdown in the world economy and the earnings growth right now in major companies, and that has not been averted by the QEs that have gone on to date. So I don't see why more Yellen is going to do any more for the economy than more Bernanke has done over the last few years.
I've heard that right now they're printing an extra $85 billion a month. Yellen, if she thinks the quantitative easing isn't working, may pump that up to $100 billion a month. Any chance of that?
I think it's quite possible. There is a limit, though, and I take exception with the description of printing the money. What they actually are doing is a repo of effect, and not to get too technical, but what they're doing is taking existing treasuries and mortgage-backed securities that exist on bank balance sheets, and they are exchanging them for very short liquid instruments that are considered cash-like. So that's building cash reserves inside the financial system, and it's taking these longer-dated, typically more risk-orientated assets onto the Fed balance sheet. So here's the thing about that. There's a limit to how much of that product is available. There's a limit to how much treasuries are available in the float, so to speak, that can be absorbed in this way. And that is connected actually to the deficits that the U.S. government is running. So one of the things that I think is largely overlooked, completely missed in the whole discussion and fervor around whether it'll be Yellen or who this, at the chief of the Fed, and also with the whole shutdown in the government, and today, a big risk rally because they're talking about kicking the can a couple of weeks on the whole debt extension. The fact is, though, that this is a deadlock over spending, and they want to reduce the spending of the U.S. government. To the extent that anything happens in that regard, that's austerity of sorts, that's a restrictive fiscal policy, and that will, I think, largely overshadow any further monetary intervention that the Feds are able to do. And also, if the deficits continue to come down as they have been, there's less need to issue treasuries. There's less supply of these instruments that they're doing the QE with. So all of these things mean that there is a finite end to the extent to which that experiment can continue. And I think that, again, whether it's whoever's heading the Fed, there's mathematical constraints there about how much is possible. So I think, watching this whole fiasco the last few days, I think really the only thing that matters, the only thing that's really going to get anyone's attention is if the stock market has a major falling. And I say that sadly because I don't believe that policymakers should be focused entirely just on what the stock market is doing, because clearly the real economy, the constituents that vote, they have very little to do with the stock market. They are mostly to do with things like job and the prices paid and their standard of living, things that matter in the real world. So you've got this focus on the stock market, and the last time we saw, for example, this kind of impasse in 2008 over the whole TARP proposal when Hank Paulson first put forward the TARP, and then the Congress rejected it, and you saw the stock market fall 800 points that afternoon. That gets their attention, and sadly, all the other trends, which are so obvious right now. I mean, the earnings numbers that are coming out for the third quarter, Jim, are all, a half of the previous expectations. The guidance going forward continues to point to negative demand cycle in the world. Just even PC sales came out, was it today, saying global PC sales, they're supposed to be high in the back-to-school quarter, actually sunk to the lowest level since 2008. So I think everywhere you look, you see evidence that growth's going down, not up. And yet you've got the stock market that's inherently tied to all the shenanigans in Washington. And it's like the two of them are in this dance, which is all wonderful until they go right over a cliff. And then everyone else pays the price, because the financial fallout is quite negative from that. Because they juice it up so high, when it collapses, it's a major economic event. Whereas if they had just let things be more organic all along, it wouldn't have had such a harsh impact.
So definitely then quantitative easing has had an impact, but some people I've talked to say it's kind of made people addicted to super cheap money.
Well, I actually think, I was thinking about this the other morning, I really believe, everyone's been talking about how dysfunctional governments have become and how extreme, polarized they are in their positions. There's no middle ground, there's no consensus. And they talk about in the old days how, Reagan used to be able to talk to his counterparts, etc. I think what's happened is that the credit bubble that billowed for the last, more 20 years and really came to a big peak in the last decade really aided and abetted extreme behavior. If you think about it in a family, Jim, if you have a budget in your house and the budget is X dollars a month you get to spend, you can understand there's a natural negotiating process or at least a balanced decision that has to go on about what things are afforded in the family, right? And if dad wants a golf membership, maybe mom wants something and the kids need this, and you sort of come to terms with what's fair based on the resources available. So you kind of have to negotiate or be fair or think of balance. When you're in a situation where you have an endless amount of cash flow or no budget whatsoever, and the way that you're funding is through extending credit, you no longer require the fiscal discipline. Suddenly you can be extreme and unreasonable in your positions because everything's affordable. And the more you dig in, the more the other people in your household are likely to say, well, if you get that, I get this. I think that's really what's happened in the governments around the world in the last, 15 years, let's say, and particularly since in the last few years. So I've talked before about how the fallout from the credit bubble when it burst in '08 and, how the new government came in the U.S. and various governments around the world, they had an opportunity to say, we're going to restore some fiscal discipline here and we're going to have to work together because we can no longer get everything that everybody wants, right? The problem is that then the QE started. And so the stock market went straight up, took the pressure off. The credit markets received additional inflows because there's all this excess money floating around. And what you find is that everyone goes back to their dug-in, ridiculous, extreme, non-negotiating positions. So I think that's really aided and abetted it. And the people who talk about the Fed as this, thank God they helped us, I think they miss the point entirely. The Fed has actually harmed everyone because they have aided and abetted this bad behavior for a few more years. And the more they can add more QE, it's not going to force the behavior change that's necessary for us to get back on a sustainable path. So that's the frustrating thing. Lots of, nonsense and distraction and incentive to bad behavior, but nothing yet in the terms of constructive steps back to sanity.
Well, yeah, it's the old, your mother tells you to do something or your dad's going to have a good talking with you or maybe worse, and then nothing happens.
Yeah, I think so. I think unfortunately humans need, I think humans don't do well in a world with no rules and no constraints and no budgets and, no connection between their behavior and their spending or their income and their spending. I mean, the U.S. government hasn't had a budget now for almost 5 years. And you're talking about an enormous economy with enormous cash flow. So it's not surprising to me that there's incredible waste and fraud and, destructive behaviors throughout. I just put up, 60 Minutes did a fantastic clip, Jim, on, disability, the federal disability program in the U.S. Now this is just one example. So as the feds of the world and the Congress has been focused on this whole stock market and whether they're, manipulating and whether they're able to re-levitate stock prices. Things like jobs have just been inert. Nothing's happened on the job recovery front. People official data may say a couple of things are positive, but the reality is the workforce participation rate's never been lower. The unemployment rate is extremely high in the young people who are trying to get started, that sort of thing. The other thing is, though, that there's been this massive explosion in the people making federal disability claims. And why is that? Because they can. Because there's a program there that funds people who have not been able to find work and now are sort of desperately looking for handouts. And so there's not enough checks and balances in the system because nobody's leading, nobody's being careful with the budget, or there is no budget, So this is the kind of mayhem that results.
We were wondering about economic growth. We always hear optimistic numbers at the start of the year, and then as the year progresses, they start peeling back these prediction numbers, and all of a sudden a 2.5% predicted growth in your economy becomes like 0.1%. Are they always going to feed us false numbers, or are they overly optimistic for a reason?
I think that they're always overly optimistic until they get to the bottom of a cycle, and then they're absolutely, so depressed that they start to become pessimistic right at the wrong time. And you see the exact same behavior in the investment advising community and in those people who are sort of unduly exposed to the equity cycle right now. So another way that the policies have really done harm, I think, that the really lax fiscal policies and the crazy monetary policies, is that it's really made the weakest players look strong. So if you think about this, I often think of debt as this sort of monster in that, like the Mad Max movies or whatever, where the little dwarf sits on the shoulder of the massive monster and looks like a big man, right? So if you think about that, a lot of debt can have the effect of making someone look like they're financially very successful, like they're, wise and wealthy and have lots of skill, when in fact the exact opposite may be the case. So you think of that in terms of, and no one really knows that until the credit basically bursts, and then the whole facade comes down and everyone says, oh, I'm really surprised, I'm shocked to see that. The exact thing happens in the investment industry, where those who have actual discipline and skill and they, are aware of risks and taking measurements and cognizant of where things can go wrong, those people tend to look wrong in these environments. And the people that are the most reckless and the most, completely oblivious or, sociopathic, don't even care, just continue to say the same old nonsense. And while credit or leverage is building, they continue to look like they're a genius. And what that does is it sucks in people's belief to the wrong people. So again, it creates a lot of problems in the world and the economy because trust is connected to the wrong leaders. And you see that today in spades because, I was part of a radio show this week where 5 portfolio managers were asked in succession, should people be worried about the stuff that's going on in Washington? And every single one of them, of course, said, oh no, don't worry, they won't default, just sit down and don't panic and all this absolute nonsense that, look at your statements. Like really what's looking at the statement is going to do? Make sure you have quality. It's just absolute gobbledygook. But that's what people say when they have nothing of value to offer. They don't know how to take measurements and they don't have any rules or skill. So all they can ever do is tell you, well, don't panic. Well, don't panic. Even when, risk is very high, prices are very high, and the time to do something is before the downturn comes. So so I'm one of the portfolio managers on there, and every single one of them before me was saying that. And of course, I said the exact opposite. I said, you've had a hell of a run if you've got back some of your losses from 2000 and 2008. Take some profits, take your capital out of harm's way. Not because Washington is a mess. Washington's been a mess for years and years, but because at some point here, reality is going to connect to stock prices, which is they're way, way above where reasonable valuations would put them, where the growth of the world is today. And, I go back to growth in the world is, there's some growth because there's humans still alive. There'll always be some consumption. But growth today is almost half of where it was at the consumer credit bubble peak in 2007-8. And so how in the world can we justify stock valuations back at and above those levels when you've got half the growth in the world today? And the answer is you can't justify them. You can only justify them if you're a fool or someone who doesn't pay any attention. So that's why I wrote an article this week called, The Dumb and the Reckless, a little joke on the soap opera, but just that the market is really full of people who are either completely naive and are unaware, and they always are fully allocated to stocks at the wrong time. Those are the ones who panic and sell after they've lost half their value. And then you've got the reckless investment community who's writing articles every week in the paper now talking about how they're, quote, comfortable putting retirees, 60 and 70% into stocks for higher yield. I mean, that really just says everything right there. That, as I say, you're with a risk seller, not a risk manager, when your financial advisor gives you that kind of stuff.
Who can you believe then?
Well, you have to read, I try and direct people to the true voices that have some clue about what's going on, that are fiduciaries, that are not paid to sell risk but are paid to manage it. And I've put a lot of links on my blog. I've put recommended books of people you can read for some insight. there are voices out there. There are unbiased people, but they're not working for the sales side. They're not the ones that get paid the more they put you into stocks. Those people just are, congenitally unable to make any sort of distinction, it seems, between their own paycheck and what's best for the client. So it is dangerous, it's difficult, but it's not impossible. People say, well, what's an individual to do? Well, first of all, you have to stop believing in miracles. Second of all, you have to understand that throwing a bunch of your life savings in a casino is not a good approach, and that you actually have a lot more control of your own destiny than that. In other words, make yourself a budget, right? Live within your means, pay off your debt, try and not waste, and don't take wild, crazy risks with your life savings. Once you've got some savings to lose, you have to really focus on how to protect that. And, if you sign up with every risk-bearing charlatan, I'm afraid you're going to repeatedly learn the hard way that that's not the good approach.
Well, apparently, just under 5% of the general population is addicted to gambling, and they account for almost half of the money that goes to the lottery corporations. Are investors the same way?
I think so. I do. That's why I say I think there's two camps. There's those who are utterly, completely oblivious, have no idea, and their first mistake is that if it's okay to be oblivious and have no idea, but blind faith in the wrong people is how that turns into a lot of pain and loss for them. So, if you don't know, that's one thing, but you have to be so careful about, if you don't understand something, don't sign up for the risk of it. I think that's sort of the main thing.
Well, one of the major U.S. congressmen said, well, because we can't discuss together possible solutions, we're hoping that prayer works. And a friend of mine who's an expert in risk management said, hope is not a plan.
Yeah, and yet that's the hope of a lot of people, and I get that. I mean, I wish sometimes that I was less aware, because because it might be nice to be a little naive. But sadly, I'm paid to be aware. I'm paid by people who trust that I can actually take measurements and will do my job, and so I will continue to do that, because the other way lies madness. I'd rather sell lottery tickets than sell stocks to people at insane valuations. And so I think it's back to I think the financial world likes you to think this is also complex and mysterious, but actually it's just about value, common sense. Something that's so complex and makes no sense to you, you shouldn't be owning it. Basically that's it.
Well, certain things, certain companies, commodities like toilet paper are always going to be sold. Perhaps that's the place to invest.
Well, the problem is that the auction of the public markets takes companies that have legitimate business models, and depending on where you are in the expansion or contraction cycle, will dramatically overvalue those good companies or dramatically underprice them. The only hope for lasting success, if you're going to be using this kind of a huge auction market, is to wait till things go on sale before you buy them. Buying them at the peak off of the most uber optimistic people who are telling you what a great company it is when the price is 20 times what it's worth, it's a horrible approach. So people get very distracted because they think, well, it's a good company, or I like the management, or, the price has gone up for 4 years. That's for one of the worst possible reasons, and yet people get very complacent and comfortable the longer price has gone up, and that's exactly the opposite of what they should do.
Yeah, by the time the public usually is aware of something, 90% of the value has already been taken out of it.
Yeah, that's it. Exactly.
Well, I hope you're optimistic that if you have the right plan, something would work out.
Oh, well, we have a great plan, actually, and our plan has enabled us to avoid losses throughout this secular bear and put capital back in at low points. But, when things are all overvalued and there's very little of value to be found, you have to patiently wait. You have to, see the forest for the trees and just say, I'm not going to be sucked in just because I'm impatient or, don't like being out of something. You really have to have more discipline than that. And we do. So it works, but it takes a full market cycle to work. If you're looking at it on a day-to-day basis or a week-to-week basis even, or month-to-month, it's a long, it's a 4 or 5 year cycle, and that's why people often declare winners and losers at the wrong point in the cycle. You need to complete the whole thing before you decide, who's a tortoise and who's a hare.
A financial planner told me once the numbers they put on the news every night for the Dow and the other exchanges, the dollar, the price of oil, he said it's a disservice to the public because they don't know what those numbers mean. Or do they?
I'm not sure. I'm not sure if that's a disservice. It's part of the information, but, I guess it goes back to, since very few people understand those numbers, the risk is that it looks all very big and important, and then they trust people who say they understand those numbers. And very often the people they place their trust in are just selling them stuff, and that's the problem with the system.
Thank you very much for being our guest today, Danielle. Is there a website people can go to check out your podcast or your philosophy in general?
Sure. My blog is jugglingdynamite.com, and our Venable Park Investment Council website is www.venablepark.com, and I've got lots of reading and articles and books and things there to help educate people.
Thanks to our guests, Doug Casey and Danielle Park, and thank you for listening. I'm Jim Goddard for Phil Mackesy. We're back next week with more This Week in Money.
This Week in Money is a production of Howe Street Media Incorporated.